The second panel discussion for the day is Harnessing Innovation for Financial Inclusion, Hi-Fi, usually. And to moderate this panel, I'm inviting Mr. Remco Wienenberg, Head of Strategic Relations on Dato, and introducing our panel speakers, Mr. Neeraj Gupta, CEO, Policy Bazaar, UAE, Mr. Vivek Mundra, Advisor and Board Member, FinTech, Mr. Fahad Al-Aidi, Senior Vice President, KnowledgeNet, Mr. Suresh Lalwani, Managing Director and Head of Coverage, Commercial Banking, First Abu Dhabi Bank, Mr. Amin Sabri, Co-Founder, Chief Growth Officer, Rocket Science Development and Medallion Associates Limited, Mr. Mohammad Roshdi, Founder, FinTech Bazaar, and Mr. Jamal Al-Mehmet, CEO and Almira Software House. So I hand over the floor to Remco. Over to you.
Can you guys hear me all right?
Hi everyone.
Hi everyone. Nice to meet you.
Same here, thank you.
Hello everyone, how are you guys?
I'm all good. I'm very pleased to have you all here on the panel today. So to just kick off the panel discussion and do a short round of introductions. First of all, glad to be part of the FinTech Middle East Summit 2022. I'm broadcasting from Lithuania today. And as you might know, from Middle East, Lithuania is quite well known for its collaborative FinTech environment. So I'm very happy to connect with you all here today. The important topic for today is financial inclusion, which has become even more important during and after the COVID pandemic. So I'm very curious to hear your opinions about some of the questions that I will be putting forward. I'm originally a psychologist, so I very much understand the relationship between financial well-being and mental health. I'm currently leading strategic relations for a company called Ondato, which is serving the compliance issue that we see all over the globe. When it comes to fintechs, when it comes to banking the underbanked, when it comes to onboarding customers who have no access to financial services, and which is actually the topic of the day is financial inclusions. Fahad, are you on the call?
Yes, sir.
Yeah, I would like to point the first question to you, if that's all right.
Sure.
And that's for today. Feel free to chime in at any moment. So if you have any kind of input from your side, feel free to interrupt me. We're not going to follow a straight pattern of questions, but I think the first one will be pointed out to you. Why do you think innovation technology companies should have a wider spectrum of services?
Yes, actually, Remco, they must have a wide spectrum to support the society and to support the financial inclusion as well. It is part of the competition. There is a lot of companies who are going to provide solutions and digital innovations in this area. And we have to get many solutions as a wide spectrum to provide every part of which is it could be crowdfunding, it could be micro-loaning, micro-lending, all of these parts.
Yeah, that's a good point. And then another point I want to point out to Suresh and to all of the other panels actually. So everybody's going to take a turn at this one. What does financial inclusion actually mean to you?
Thanks, Remco. So financial inclusion is basically, making finance available and accessible to everybody, right? So, so basically equality. We're talking about equality, irrespective of what your size of operations are and what sort of demographic you're in, or what sort of reach, which location you're based in, avoiding all that, and making availability of financial products, banking services, whatever, for sort of everybody. So for example, just to give you an example on this, just because the size of your company is small, right? While your financials may be fantastic, your ability to do business, your business model may be fantastic, but just because the size is small, I'm sorry, I can't be dealing with you. So that's something that the policies. I mean, because there's a vested interest of financial organizations, right? Of profitability and stuff like that. Now, small necessarily does not mean bad or poor credit. That's not what how it should be sort of treated. So that's personally what I feel and believe.
I can resonate with that. But anybody like Neeraj, would you be able to comment on this?
Sure. So from our perspective, financial inclusion, as Mr. Suresh mentioned, the other aspect is obviously the equality from if I take the similarity of the size of a corporate, it is obviously the size of the wallet of an individual. So you have spectrum of people at different levels of salary and different levels of service industry. And I believe what we mean by financial inclusion is be able to provide those products and services across those spectrum of people. So for example, as Mr. Suresh mentioned, so for example, if a person is working with a corporate which is not very big, but the financials are great, he might not have access to a credit card or a banking services or a loan just because he is part of certain organization or at a level of salary, right? And that is what I believe the technology and fintechs are trying to address. And what I also wanted to take this opportunity to also say, see, if you look at the traditional model of distributing financial products, at some point of time, the bottom line dumps come into play, right? And you are always trying to figure out with every opportunity, what is going to be my bottom line? And you might have a consumer who's ready to pay, for example, for an insurance product only 100 dirhams. Now to service him in an offline traditional way might not justify the cost. And that is where all the technology comes in, because you can reach out to these consumers digitally, probably not in a physical medium. And similarly on the organization side, right? And that is why if you see in the UAE region, on the bank side, on the insurance side, a lot of companies are now launching digital platforms, which makes it easier for companies as well as individuals at different spectrums to be able to use those products.
Yeah, that's very interesting. And I would like to... Feel free to chime in.
Financial inclusion in general, the term is being used historically for people to have the ability to have an account from a consumer point of view, just an account, and if you go more, they are able to transact using this account frequently. It's not only just bring an account. So you're going to see the numbers and all the statistics showing if the people having an account or a banking account or whatever. I think, as my colleague said, should go beyond this one, in case of corporate or consumer or SMEs or whatever, to the ability of people to get finance. I think this is maybe we are moving to give the financial inclusion a meaning, a better, more comprehensive, holistic, meaning or approach. So, but here at the same time, what my colleague is saying, your risk also will dictate if you are able to lend or to finance these guys or not. It doesn't mean, maybe if someone salary, whatever, not buy a car, then he cannot buy a car. The only thing here, we need to use a digital innovation to be able to rightly segment the customer. And let me give you something which is I really like very much. And one of the use cases and somewhere in India, I read about it, like, if you're gonna do, what you call credit scoring for people which has never been in finance before, what you're gonna do? These guys, they don't have salary, maybe they have an income from somewhere, and I believe the innovation comes here. Innovation not only technology, even from the process itself. So people used to say, okay, to ask them what kind of TV you have. You have a big TV, small TV. What kind of school are your children in school, universities? So you start looking at other parameters where you can really, get to score this customer, because the data is not available. So we need to find the innovation should help us here to be able to score the customer or segment the customer in the right way, so we are able to finance him or give him the product which he deserves. Thank you.
That's a very good point. Would anybody like to add something to that? Perhaps Vivek, you can add some comments to this.
Yeah. So just to add on probably what my other colleagues have said. So financial inclusion, let's be realistic, right? Still more than 50% of the people within UAE are unbanked or underbanked. So financial inclusion is not just having a bank account or, as others have said, right, having more financial products, but something which is relevant for them, right? So people have spoken about micro lending, micro insurance products. But if we are using digital, the people, the customer, are they really digital savvy? So the whole digitalization comes into picture. We are talking about millennials here as well, who are digital, so they have got a different experience. But if I take it to the workers, the blue collar workers, right, which is still more than almost 2 million within UAE itself, are they really digital savvy? Are the products which are being made relevant for them in their language, in their process, what they want? So financial inclusion is not just providing them the products, but providing in the way they want it, and which is relevant for them.
Yes, I totally agree with that. And perhaps Jamal, you can comment a little bit on that and what kind of solutions we need to develop to tackle this issue.
Yes, thank you, Remco, for this, and I'm pleased to be with this panel. Thank you all. Just to add a little bit of the definition of financial inclusion before I answer your question. So the first one is basically that, as defined by Gartner, this is part of the DEI, which is the diversity, equity, and inclusion technologies. And it is mainly how to innovate, redesign the product that we have, look at the pricing, maybe the delivery systems to make sure that we have accessible financial services to targeted low income or small and medium enterprises here. The question that is directed to me, how to do this, yes? So there are 5 things that we can look at when discussing how to innovate in the financial inclusion. The first element is about planning. I'll explain this in a minute, but I like to list them all. The second one is about integration. The third is data, and then about monitoring. And the last one is literature. You know how we have to educate people and pass the knowledge across about the financial services and what would be the impact if they didn't, for example, settle alone. So I'll start with the planning. When we look at planning, usually when we implement a project with banks or other entities here in the region, we design their customer journeys, and we model their business architecture, IT architecture, so they know what is the as-is architecture today. And then once they do this, they have a full visibility of what's happening today as of the current architecture. And then we map together, we model the future architecture of how these processes should be redesigned, how we can optimize the activities and enhance the service offering through different channels. So once that's done, you will define the touch points, how your customers are interacting with you, and how you can actually bring a better digital experience for these customers. But I'll touch base on what Mr. Vivek said, that some of these people, they don't have maybe a smart mobile to engage with your services. So you need to have a channel that allow them to process this, and I will come back. I will come to this in the second point. So the first one, planning, to understand your current and future. The second one is about the integration. So the whole thing, when you talk about fintech or creating a new portal, being a digital bank or open banking, it's mainly talking about APIs. And this is what we usually do, that we go side by side and help with our clients to have an API strategy, to know how to develop the right APIs and slice and dice their current services. So for example, if someone has a current account this current account has different services. One of them is a debit card, another one is a checkbook, and many others. So how would you slice and dice these services to offer them as APIs? And these APIs could be used by FinTech or any third party in the world. The nice thing about these APIs is that it will allow third party across the world to use your APIs and provide your financial services. So instead of opening a branch, and there are lots of studies that says, for example, from peak performance data says 52% of the bank branches are profitable, while the rest are not. So instead of opening a new branch, you could facilitate your services through APIs and let the developers across the world develop on top of your APIs different applications. So for example, there are companies who are using APIs to target specific customers in the shipping line, in the music industry, in media. We saw lots of different FinTech applications coming up in the world that are using these APIs to cater this needs, a specific niche market in the world. So the third one is about data, and this is where the most of the subjects when you talk about financial inclusion are concentrating about. Why? Because at the end of the day, and as Mr. Mohammed said, BFSI banks and insurance, they care about money. At the end of the day, they have a shareholder to report how much they made money at the end of the year, how do they enhance their bottom line, and they have a depositor that they need to protect their assets and make sure that they have a sustainable income. So how would technology help them to do this? By employing big data and data science platforms that help them to, first of all, clean this data, then model it in a way that will make a meaningful outcome. For example, people are using these technologies to change the scoring, the credit scoring, by analyzing their payment for the bills, or they analyzing their mobile usage or social media and many others, because they don't have a financial history. So to analyze their scoring, they can use these technologies to do. And the fourth element is about monitoring. So once you adopt this model in the data science, once you do this availability of the APIs, then at the end of the day, you need to monitor this to see, am I doing well or not? Do I have to change my machine learning algorithms to adapt to other elements that we're not taking care of? And one of the examples that actually was spread all over the world, the big news, that Apple credit cards were biased in terms of gender. So they were giving more credits to males instead of females. Maybe since we're all here males, it will be good news for us. But for the other gender, it is very actually risky to have these algorithms built, but not monitored. And that's why platforms like Nine, for example, or other platforms, they are running these algorithms in a low-code environment, so you can change it very fast. And they have the machine learning capabilities that allow the algorithm itself to correct itself and be fair with gender in this example. And at the end, yes, literature is very important to this category of the population. Why? Because they need to know more about what happens if they don't comply with the financial services requirements and others. Yeah. So this is in brief: plan, integrate, more about data, monitor, and infrastructure. Thank you.
That's actually very good points that you just highlighted. So I would like to kind of toss this over to other speakers. So first, Suresh, you're coming from the bank. What do you think about these points? Data monitoring, is there any data available? How can a bank like you on such a large scale, let's say, help with financial inclusion? Can you give us a few examples, perhaps?
Yeah, so very good points, very valid points. While while I'm not a very solid technology guy, but what I understand is that there is a lot of data available, and in fact we don't make proper good use of data, but yes, clearly there's a lot of data available, and in real life as a bank, the data that we sort of use a lot on the commercial banking side, we do a lot of analysis on financial statements. But then when we have to do sort of simpler credits, like for example, lending on the back of point of sale machines or real estate backed loans, so we use bank statement analysis, the OCR technology and the algorithm that is there behind the bank statement analysis reader. So that really helps us so I can tell you that, for example, if you give me 1,000 pages of bank statements that need to be analyzed, but if you do it in a manual way, it might take a few days for any analyst to do the credits and come back with an analysis. But if you do it through using the OCR technology and putting some sort of formulas and algorithms at the back end, and you analyze these bank statements by putting into a bank statement reader, that really helps. And actually we crash the time from, let's say, a few days to a few minutes. We are able to analyze the bank statements, come up with answers like, what were the total credits, how much is the total, how much is the average balance, detect some fraudulent transactions. For example, if anybody has tampered the bank statement, and for example, you've got entries happening on February 29th or June 21st. So these things sort of get picked up very easily, because there is a logic, there is an algorithm which is running at the back of the reader, and these things work very well, and that has really helped us in improving the productivity and of our people, and lending has sort of become easier. Now just imagine, this is the beauty of using technology and advanced solutions in doing sort of these analysis, which we used to earlier take, let's say, for example, a few days. Now it takes a few minutes, and we're able to do faster credit, and obviously it brings down the cost of operations. It has a big impact on everything and anything that you do, right? So this is one of the examples that I can sort of cite it out.
Oh, that actually pointed me to another question that I didn't script, but I think it's an interesting discussion, because I think a few panelists here can actually add quite some knowledge to this. So I would like to ask Jamal, what are the biggest challenges in this field? What are you running into, let's say, when it comes to technological issues and challenges, and how did you solve them?
Thank you again for directing this question to me. So the challenge is that some of the banks, they don't realize the value of this population, and they have the right, because let's face it, to score this population, it's not an easy task. It's not the regular job that they are doing now, and I'm sure that Mr. Suresh can explain more about this, but they have to look at different types of data. For example, I will mention again the mobile usage, the social media, maybe their travel, maybe their taxes, and other information they have, to make sure that this person is legitimate and he can actually be a good candidate to get the financial service. Because at the end of the day, the financial inclusion does not mean that you just spend your money everywhere. It just says that how to create a good community for the banks to lend or to give them a financial service. It doesn't say that it's not yes, it is categorized as social technology, but that doesn't mean at all that to give money without getting back. So we need to make sure that we are creating a good community that will be profitable for the banks, and this is what is the real impact. In terms of numbers, just to mention that doing this by 2025, the World Bank are expecting to increase the GDPs in developing countries by 6%, which is about $3.7 trillion. And that's really massive in terms of economic growth globally. But to come back at the challenges that are happening, first of all, the credit scoring, and that's solved by implementing the big data platforms and data science to make sure that all the needed required information that we have it synced in one location, to make sure that we can analyze and get a financial model that will score this category of people. The second one is about the availability of the APIs, because there are lots of fintech companies that until now are facing some difficulties to connect with the banks in the region, because not all the banks are open until now. So the banks in the region should open their services to the world and to allow these fintech companies to connect with them so they can grow, because again, the banks today are very customer-centric in a way that they don't want to share anything. The fintech companies are just adding another channel in your services to grow your business. So this is the challenge that we can see with the fintech, how we can grow this market. And the third one is basically about. So the first is about scoring. The second is about integration. And I can see that there is still some lag between what should be done as a plan in the future and what's today. So it has to be clear for the management how they are today interacting with their customers and their customer journey, what are the touch points and how these customers are interacting with them in each touch point, and where is the leakage of these customers and the customer journey, because you need to map the customer journey and say, for example, in step 1, this is how much people are dropping, and in step 3, this is how much people are dropping. So you need to see what are the mechanisms and the other analysis that are letting these people drop from your service journey, so you can attract them again and see how to solve them and get them again into your service. So this is how I can see it. It's more into integration, credit scoring to solve this, and third one is more about understanding the customer requirements and studying more their customer journey.
Yeah,
let
then I have some more.
Let me add to this as well. I think part of the challenges which we are having in the financial services area or banks and so on is the availability of data and the cleanness of data. Being a CEO in banking for many years, we have a major issue with the legacy data we're having. The data read, the data, consistency and so on. So I think the issue here, the data quality, is a major issue facing all the banks. So I think this is another exercise we need to work very hard on it. Most of people, they go in this journey and they try to score, customers based on different parameters and so on. They need to work very hard on their data, because all the models they are having, yes, it's there, but if they want to go beyond this one, then the data is not available, it's not consistent and so on. So I think the data quality is another major issue. I think Jamal maybe mentioned it in a different way, but I think this is one of the major challenges financial services are facing. Thank you.
Actually, I used to work in banking personalization, so I know all about that particular issue, that there's just not the data available. So I wanted to ask to Fahid to kind of comment on this question. Coming from KnowledgeNet, what kind of challenges do you run into? Let's say, and also perhaps give a bit of reflection on, when it comes to financial inclusion, compliance, of course, is a major component. And I think that Vivek can also comment on that after that. And Suresh can comment on that after that as well. So I would like to get your take on that. How do you see this? What are the real major struggles in this industry? And how can we solve it?
Thank you, Remco. Actually, I would like to thank Mr. Mohammed for the data cleansing tip he gives. Actually, this is one of the most challenges I can see in the market and in the banking and financial services industry at all. Unfortunately, there is no owner in this entity's data. That's why it's not an obvious issue or problem to them to name it as a problem that we don't have a clean data or a valuable data. But actually, this is one of the biggest challenges. And for myself, I can say one of the biggest challenges also is the government. Cost of acquisitions, education and financial service awareness Arabia, it's worth to mention that the case is a little bit different. As we can see, so many big leaps toward financial inclusions from all ecosystem parties, whether they are banks, central banks, or fintechs as well in the last couple of years. Actually, it's worth to mention also that in the last couple of years, as per according to the ambitious vision of the Kingdom 2030, the banking landscaping in Saudi Arabia is very advanced when it comes to digital banking. E-government infrastructure supported this transformation as well, which started a couple of years back with the beginning of the Kingdom Vision 2030, where banks actually are able to start the full digital customer onboarding to open their bank's accounts and then entertain most of the banking services digitally as well. Thank you.
Interesting. I would like to ask Vivek to also give a bit of comments about what are the main challenges that you face and how do you solve them?
Sure, thanks, Remco. Probably I'll touch base upon first what Jamal mentioned about the conventional banks, and they're still not yet open, right? So as he mentioned about the banking as a service, some of the major challenges which we have seen the fintechs facing is getting the simple BIN sponsorship from a conventional bank. Right? The conventional bank are there having the license, but then that getting the sponsorship and allowing the fintechs to go and provide those services to the customer is one of the major challenge, right? Getting that license to go and provide the challenge. Second, on the compliance aspect, which you said, which more or less correlates with the data aspect, the whole KYC on onboarding. Yes, we have moved towards digital onboarding, but how do I go and access a worker who's probably staying somewhere with 20 odd peoples, right? The whole digital onboarding and the KYC, the location itself, how do I get his address proof? How do I onboard him? And that's one of the major challenges which the conventional banks have faced, right? Apart from being just beyond a certain salary limit, the whole cost of acquisition, as Mr. Fahad mentioned, is significantly high. So how do you reduce that cost? The accessibility is one of the major challenges. Accessing that end customer, accessibility to where his ecosystem is. So if someone is going and buying from a small Bakala center, they don't have POS machines, they accept only cash. So how do I move that customer from a cash-based economy to a cashless economy and ensure he used the mobile app even if he has to do the certain payments? So financial literacy, accessibility, and yes, the whole onboarding and ensuring it's smooth for those kind of customers is one of the major challenges which the industry is currently seeing.
That's a very valid point. So that's why I would like to move on to Neeraj, because coming from Policy Bazaar, I'm sure that you ran into quite some regulatory challenges along the way. So perhaps you can comment a little bit on the points that were just made about data availability, about regulatory challenges, and what's your experience in that field so far?
So obviously, from Policy Bazaar standpoint of view, regulatory obviously is an ever-changing piece. So what we've seen, at least on a regulator side across different geographies, about 10 years ago when we started, the regulators obviously did not have a clue on what the digital is going to look like. And that is where we obviously work with the regulators a lot in terms of educating what our purpose is, what we want to do, and how we want to go about this consumer accessibility for financial products. How do we want to make this as a more consumer-centric vision in terms of accessibility of data, getting the right products. And we work with the regulators, and what we've seen is they have evolved many folds, right? See, with any big organization, so regulators are also in themselves a big organization, right? So they take time to move, but once they've understood the things, they move pretty much very fast. And so the point is, from a company standpoint, is you also need to be patient with things, right? You can't expect things to move very fast, but you also keep on educating. That is what we've done, and we continue to do so in the region as well. Apart from this, I just wanted to highlight one point of financial inclusion, which is, see, UAE is a very transient population, right? a lot of people come in, go out. And the biggest challenge that I see is, till now, none of the banking industry has been able to solve accessibility to banking solutions for a new to country person. So I remember from my personal experience when I landed in this country, the bank account opening took a lot of time. They expected certain documents which were already under process, visa, Emirates ID, and till that I have those, I can't process, and obviously I can't get funds in to incur my expenses. Now the thing is, being a transient population, people are coming in, settling into the country. So obviously, if I have moved from a country to this country with a job, with a company, which means I would have some sustainability, right? In due course, I'm not coming here just to work for a month. So it was a big trouble to get access to credit, because everybody asked me, "Are you been living in the country for about a year?" I'm like, "No, I just moved," right? I believe that is one piece which is obviously unique to UAE because of having a transient population. And as an industry, we need to figure out some way or the other. For example, at least I can talk about from an India perspective. If a person is moving from an India to here, we have credit score availability from India, which can be accessed. And also the credit score in India is a lot more evolved. You have a lot of more agencies. It's been a lot older score, and a UAE score somewhere has been adopted from those learnings. So I wanted to share that on a lighter note from personal experience as well.
That's very interesting. Actually, I would like to ask a different question that I didn't put into the question list that is sent out to all of you. And perhaps each of you can actually comment a little bit on this, because I'm very eager to take all of your perspectives on this. So I will start with Fahad. How is neobanking transforming the Middle East, and how is it actually helping with financial inclusion?
Yeah, I think now the regulations is being put on through our regulator, SAMA, in Saudi Arabia. It will be, I think, available by mid of 2022 to go for the open banking and neo banking services. And actually, the existence of the fintechs are playing a key role in this, in the market of Saudi Arabia. How they're going to support? Absolutely, it will going to support, and we're going to reach everybody. I can say that actually the pandemic accelerated the adoption of digital solutions, and people started migrating their day-to-day activities and behaviors from conventional ways to more digitalized journeys. People now are more shopping online rather than visiting stores anymore. And actually the demand is growing as the experience excellence is becoming a must. And this will be provided through the new banking, digital services, and open banking.
That's an interesting point. Because for me, of course, coming from Western Europe, where neobanks are, reigning quite strongly at the moment, I would like to ask Suresh, what is your view on this? How do you see the rise of neobanks and its relationship, let's say, to financial inclusion in the Middle East?
I think they're going to be playing a role of a catalyst, and it's going to be definitely a very good thing for all of us. Neobanks are going to be very, very big players in this whole of financial inclusion and banking, because it's very interesting, right? In the middle of all the BAU work, business as usual work, and stuff that we have. If we have a new project or a new idea, then it's very difficult for the existing bankers to sort of take it up and do it. But these new banks are taking one idea at a time and going and running ahead with that. That's fantastic. And what might be mentioned on the rise of neobanks in Saudi, and particularly Saudi, with the vision that they have, which is fantastic. And the good thing is, from a business point, from companies' point of view, Saudi there's one agency that issues trade licenses, While if you compare that with UAE, there are 50 plus authorities that issue licenses, including the various free zones, the various emirates and stuff. And that actually, we need one identity. Like we have Emirates ID. There has to be something like that for businesses. If you have that, then your credit scoring, your credit history and stuff, all that can be stored in one place. You can do your digital journeys and stuff. As we speak currently, doing stuff for a sole proprietor is quite easy. Neobanks getting into, not on mute, noise background. So now it's gone. So for neobanks, it is easy to sort of dealing with individuals because it's easy to identify the individual and assess the salary, income, or whatever their financials are, and for sole proprietors. However, when you move up the ladder, let's say you're talking about partners or you're talking about multiple people, it gets even more challenging. And that is something that we need to solve for, and that can be solved easily, with introducing some sort of new regulations and laws in place, and having a sort of a unified ID for various companies, and then it can be solved. But yes, neobanks in the space of individuals and in the space of sole proprietors will be a game-changing sort of a thing in future.
Yes, I think the Middle East is catching up quite quickly now with Western Europe, and that's a good question to ask to Neeraj. How do you see compliance being a crucial factor? And what are some of the main challenges that you see, let's say, from Policy Bazaar in tackling this issue, making sure that the user is actually the user that the user is?
So from a compliance perspective, so if I've understood the question correctly, so from a Policy Bazaar standpoint of view, compliance is obviously very important, right? You want to do right by the rule of the land, right? But at times, a lot of compliances are built on the historic way of functioning. It is not built on how the new age solutions or things are going to come. For example, neobanks, you definitely need a new regulation and pieces to come in before these things can operate, because the earlier regulations or systems were not catered to this, right? Now, the other aspect on a compliance level is user data. There are many regulations on personal data, on how do you use that. But at the end, for a financial institution, if you really need to evaluate a consumer, you need a lot of data. And then it becomes a question of, am I allowed to use this data? Am I allowed to track this data or not? But at the same time, what we're also saying is customize the solutions for the consumer. And when I talk about customizing the solutions for a consumer, which means I need to have an individual scoring or a data point which is very different, right? And at the other end, I am restricted by using those data points, right? And see, the other aspect from a compliance perspective is the institutions need to be able to share this data in a cohesive manner, right? Now, from a fintech perspective, if I talk about Policy Bazaar or I talk about a bank, now if we don't exchange information, then there is gonna be a huge challenge, right? Now, as some of my colleagues mentioned, that a lot of banks from an API perspective are not there, right? And the fear is, and it's not that they can't be there. The problem is, how does the compliance look at it? The consumer data, is it going out, coming in? How do we comply with that? So, for example, we've been constantly having conversations with banks, and they tell us that, okay, we are ready with a platform, but our compliance has an issue in giving back to you, will we approve this consumer or not? I'm like, okay, but in an offline world, you're anyways telling your agent we will approve this or not through some system, right? You might be telling that through a manual conversation, but why can't you document that, right? So I believe compliance in itself needs to be looked at with the type of industry or the type of process we want to build. And if we do that, then probably we can address a lot of problems.
Yeah, so now how are we going to solve this on a technological level? And I would like to ask that to Jamal. What kind of solutions do we need in place?
Jamal, you're on.
basically, before we talk about this, how to tackle this, again, I'd like to touch base on the two things: the regulators and the ambition vision that they have in the region. For example, the Saudi 2030 plan, the Saudi government are planning to increase the cashless transaction from 36 to 70% by 2025, which is almost doubling. As Mr. Mr. Fahad was mentioning, that it is really blooming in Saudi when we talk about the open banking and FinTech. And that's the reason, because it's a direct plan. They want to double the cashless transaction. On the other side, the SME financing, they want to increase it again, doubling from 5.7% to 11% in 2025. That is what's driving the economy there, the financial sector towards open banking, financial inclusion, and others. In the UAE, on the other side, we can see lots of different initiatives. Like one of them is the Emirates Development Bank has launched a product with YAB for SMEs, small medium enterprise. And at the same time, YAB had also launched similar products for individuals linked with RAK Bank, which is really targeting this low-income laborers and solving lots of problems for this category. Again, if we talk about the challenges and how to solve it, thanks for the technology today is available, that it is allowing us to clean the data, as mentioned by Mr. Muhammad and Fahad, that it is really important to have a data cleansing, and the technologies today available can help us do this. And what we need is basically to make sure that we have the right data that is allowing us to analyze this specific category of people and companies. So this is number one. The second thing is, again, the API management about the integration is very crucial to make sure that you can slice and dice your services and only share what you want with the specific people, because the API management can help you, and this is what's happening today in the market, authorize and authenticate the people who's accessing your services from external. So these are two things that we can have to solve the challenges. And additionally, for the customer journey, I'll touch base on that, that it is very important to have that map and designed in a way that can be visually analyzed by the management or decision makers to make the right decision at the right time. So this is my take on this.
Interesting. One question I want to ask to Neeraj, which is a little bit unrelated, because I think we can all elaborate. I think I will ask the entire panel to tell me a little bit more, also because for the Western European audience, to give your insights about how the Middle East is developing in comparison to, let's say, to Western Europe. How is open banking evolving in the Middle East? What are the kind of policies that are very different from, let's say, GDPR and PSD2 as we have that here? Is there any comment that you can give on that? Perhaps Neeraj, you can start with that, because it's very important to clients.
See, from an open banking perspective, I believe it is still evolving. See, if you talk about all the neobanks, they've just started on a beta phase, right? And I believe it's just a start, at least in the Middle East, from a UAE perspective, it's just the first step. I believe we have every year where a lot of these things will come into force, they'll be going live. And I believe once that happens, that'll be the right time to really have a debate and see how this evolves from a policy perspective, right? That would be my take on this.
Yeah, very interesting. And how is that from your perspective, Fahad?
Yes, actually, I see that it must be there as soon as possible, because actually we are in the transformation era. Actually, innovation is a transformation of legacy, and as per the changes done with the day-to-day activities of customers, you can see that we as technology providers must be ready for this innovation. indispensable digital products and platforms which will allow the success of the new innovations across the market. And the most important thing that this have to be quick, because actually due to the fact of that yesterday's technology is today's legacy. That's why we have to be fast.
And to Suraj, another question. It's a bit out of line, but I'm just curious. I used to work in core banking myself. How do you see that? You probably know quite a bit about this. How do you see that core banking systems are actually making innovation slower, or perhaps dragging it down?
So actually, Remco, that's a very, very interesting point. How much ever we want to do things, how much ever, there are people who are ambassadors of change, but then you have a legacy system, which is your core banking system. Now that has been operational, and particularly this is more to do with banks that have been operational for maybe 2 decades or 3 decades or 4 decades. You've got your legacy system. Now they are not very, very agile. They are not very, very flexible. So at times it needs a full overhauling of things, or maybe you completely scrap out something that you've bought very expensive, and you got a lot of shelf life already remaining on that product. So it becomes a very, very challenging question to sort of dump that and you get onto something new. So the best thing to do is, and that's what I faced this challenge quite a few times in my previous organizations also, that while you have your core banking system and your core thing go on, your BAU go on that, but you start developing something small, something more agile in a more sort of the sort of modern way of project management. You build that and you start doing with your MVPs 1, 2, 3, and you keep scaling that. So you have parallelly 2 systems running. You've got your old core banking systems also and things on that core banking system, and then you've got these small apps or small stuff that you keep building and nice stuff. And as and when this becomes really big, you sort of change it or whatever, you do your cost benefit analysis. So I think, but absolutely right, core banking actually is, if you want to change, it is not an asset, it is a liability.
Yeah, no, absolutely. A question that I would like to point out to anybody that is willing to take up this question, because I'm starting to read the questions.
Remco, Vivek, just want to probably add before we move to the next question. I think 2 points. So one, as Jamal mentioned about the regulators' stance, right? So as if I give an example of UAE, right? So we have Al Etihad Credit Bureau standing on one side, right, which has got all the credit data and which is like becoming more and more mandatory for the banks and the telecoms and the utility companies to provide their data, right, which eventually is creating that whole repository of data which can be eventually used. And secondly, from the banking perspective, this whole, I think you mentioned about the Emirates Digital Wallet, right? So the whole UBF, which has been developed with 15 banks, right, ensuring the overall KYC is being streamlined and centralized. That's probably will help a lot to build that first repository of data on which things can be built. The second point on the neobanks, as you mentioned, right? So yes, neobanks, they are obviously it's as evolving as Neeraj mentioned, and it's a new wave, which is to be precise, would be seen over the next 2 years. But then these guys have got the license. I think 2 days back, Saudi gave one of the license to D60. But then they want, right? They want one product, the whole banking as a service FinTech, which comes into picture, which becomes their aggregator in the middleman and provides the complete ecosystem of the solution and handles them to move or launch a particular product in the shortest possible time. So probably that's where the new FinTechs, new technology needs to come, which will help those new banks to go live.
Yeah, and I think that proper compliance and proper technology platform will be crucial to that. I'm gonna post a few questions from the audience that might not be directly related to financial inclusion, but I think that so far in the panel we touched upon a lot of points from a technological point of view, from FinTech trends point of view, and from many others. This is an interesting question to you guys. I think for Western Europe this is going to be interesting to watch. It has nothing to do with financial inclusion. Well, in a sense it does. But Are there any crypto-friendly banks in the UAE at the moment? I will leave this to anyone to answer.
Not that I am aware of. I don't know any of this. You're muted, Neeraj.
Sorry. So by friendly, if you mean no bank currently stops you from transacting, then yeah. But nobody's promoting it. I can say that. Probably Suresh can have a better view on that.
There are a couple of. Go ahead, Suresh.
Jamal, I agree with you. I am not aware of any bank who's accepting or working towards cryptocurrency. I think we still have some time to go for that.
So there are discussions, just to have more context into this. There are discussions currently in the central bank of the UAE and in the UAE as a general to introduce a cryptocurrency for the country. That didn't see a light yet. Inshallah, soon we'll have it. The central banks issued a guideline for the FinTech in the UAE. And I saw a couple of applications. I can name some of them, like YAP, for example, application. It's really progressing very well, targeting this type of population in the UAE. And again, one more, which is Engage DXB. It's an application developed, I think, by Dubai Economy, and it was targeting the low-income people to use this application and even connected with small groceries and all that to help them transact these transactions. This also comes back to what Mr. Vivek was mentioning, that some of the supermarkets or these small groceries don't have that payment, or they only accept payments with cash. So Engage DXB was targeting this category of people to accept payments through the same application. But this is what I know about Engage DXB. But I didn't hear of anything about an application accepting cryptocurrency in the UAE yet. I hope to see it soon.
No, that's interesting. Yeah, that's interesting. And how is that looking in Saudi Arabia, Fahad? Is there any kind of discussion going on?
I think it's the same, Remco. I don't know about someone or some entity promoting a cryptocurrency here in Saudi Arabia. And actually, I don't know, but I feel that it's the whole Middle East. I don't know exactly, but I feel it.
Then another question towards you, and I think I will ask it to all of you on the panel, so just please follow with me. A question for the audience is, how do you feel that your government's actually supporting integration with modern financial technology? Do you feel any kind of support from the regulatory bodies?
Yes.
I will start with Fahad. Yeah.
You are talking to me, right?
Yes, you're first.
No issues. As I said before, yes, according to the directions in Saudi Arabia and the vision of 2030, yes, there is a full support of the government. Digital banking solutions, everything. And actually, this is supporting Saudi Arabia to be booming in this area.
So we can see quite some excitement developments happening in that region. And how's that from your side, Vivek?
Definitely, yes. There's a lot of support from the government. Probably I'll touch base of the first question as well on the crypto. So as almost everyone has mentioned, yes, there is no as such, but from a government perspective, definitely there's a lot which is going on, right? The government is trying to build that overall regulatory framework as the first and foremost thing to ensure the things post that would go more in a smoothened way. So like ADGM, DMCC already have come up their crypto frameworks. The UAE at overall level is working. Even the other regulators are working. So that's the first and foremost, which government is also proactively thinking. and this needs to be there. The second, on terms of any other thing, financial technology, yes, with this whole new banking license coming into picture, yes, that's the foresight which government is seeing that yes, there is a need, and supporting various the startups, the whole ecosystem which they have built, especially within Dubai, if I see, right, the whole ecosystem which has been built, ensuring everyone comes on the same platform. That's probably the biggest support which government can give to any organization.
I agree. In Europe, I think you gents are probably all quite familiar with the PSD2 execution, which was quite poorly done actually. Of course, it started off the whole open banking industry, but it was a completely fake and strange regulation. So I want to ask to you, Suresh, how do you see that? How do you see you and the government coming from such a large bank? What are your biggest challenges? Do you feel that there's support in the regulatory environment?
So, Remco, the government of UAE has been very, very supportive. Right? I'll speak about the business side, the corporate or SME, whatever you call it, like anything to do with non-individuals, businesses and non-individuals. There's a lot of support from the government in terms of coming up with various kinds of plans, how we can sort of support and finance SMEs, bringing in financial inclusion and working in that direction. There's a lot of support. In fact, we've been working with a lot of government-backed initiatives and sort of funds, venture funds. There are credit guarantee schemes, like one of I think Jamal mentioned about EDB. That's just one program. Like EDB program, there are 4 or 5 programs currently which are running, and we are closely working with all the government bodies to make sure that these programs are successful, and there's a lot of action on that side. To do with the regulatory and the laws, there have been some very good improvements, enhancements in the laws, wherein things are becoming more and more friendly for the business owners. For example, we had the check bounce law change. No longer, if your check bounces, you'll be in jail. So that's sort of out of the window, right? There's a very big change over there. There's another very important law that has changed, is to do with supply chain and with factoring, wherein there's a regulatory requirement of having a notice of assignment and a confirmed assignment. Now that has changed, and it has become much more simpler and easier, which is going to be increasing supply chain financing and invoice discounting in the country, much better as compared to what it used to be in the past. So like this, the government has been very active. Proactively, they listen to people from the banks, they listen to business owners, and they come up and they keep changing things. So really, hats off to the government. They're all working in the right direction. So we're quite positive in working with them.
That sounds very good. And perhaps another interesting topic to highlight, also because of financial inclusion, because this is of course a direct relationship. As Neeraj, perhaps you can give me a little bit of input coming from policy bazaar. What are the biggest regulatory challenges that you run into? And perhaps give a few examples about how you solve them.
So I'll start with when we started, obviously, Policy Bazaar. The couple of regulatory challenges that came about was suddenly a regulation came about where they say, okay, digital cannot work out, you need those wet signatures because they are more sort of authority or assurance that the consumer has signed it. And we obviously went back to the regulator in terms of the wet signature can also be faked, and the consumer can literally say, I have not signed it. What do you do in that sense, right? You're not recording the conversation, you're not recording that. So that is where we address that, because at least we are working through a calling system, through an email, so everything can at least be tracked. See, if you look at our typical way of working, so we don't meet a consumer physically, typically, right? We have all conversations over a phone call or an email or a chat. Now that at least gives me an assurance on whatever conversation has happened, there is some proof behind it. Now in a physical meeting, we used to always face the challenge where the consumer versus the agent's word, right? The agent has said something, the consumer has said something. So for us to address that, we had to obviously put in a proof of concept on why we believe digital signature is going to be equivalent or better for the signature. That is one piece, right? The other piece was we had to obviously work with the regulator in terms of changing the entire process on how a typical insurance product is bought, right? So for example, there is a fundamental in insurance, you need to collect the money and then issue a policy. Now you were telling that the money needs to go to a provider, not to an intermediary. Now the problem there we had was if the intermediary is not allowed to collect money, which means he has to rely on an individual manufacturer's payment methodology. So as an aggregator, we work with, for example, 30 insurance companies. Now for me to adopt and work with individual banking of the manufacturer becomes a pain point. And from a consumer perspective also, I can't give him a seamless experience. So obviously we then developed a methodology with a bank where we came about to address this problem. See, the regulator also had a challenge in which it wanted to ensure that the intermediary, whatever money it collects, it goes to the manufacturer. It doesn't sit with them or they don't siphon off that money. So we came up with a solution where the money would go to a nodal sort of an account, and the money can only flow in two ways, either to the manufacturer or to the consumer. There is no way entity like Policy Bazaar will have access to that money. Right? So these are the couple of challenges we did face and address them.
Yeah, that sounds very interesting. I'm just a little bit mindful of the time because I think in 9 minutes our session is about to end. So what I would like to do, I would like to ask each of you, I think we discussed a lot today. We discussed everything from KYC to crypto to data monitoring to trends in the Middle East, to compliance, to open banking, to banking developments, to data issues, to credit scoring monitoring, cashless society, and much more than that even. So we covered a broad range of topics. So I would like to thank each of you for your individual contributions. And I think for Western Europe, this is a very interesting insight that you have delivered today. So thank you all for that. I would like to conclude this session with your key takeaways from this session today. And I think that perhaps the main point could be, what is the future of financial inclusion and what are the main elements that you see there, or what are your key takeaways from today's discussion, so from the other panelists? And I will start with Fahad.
Thank you. Actually, I can say that the future of financial inclusion would be somehow taking the shape of embedded finance in everyone daily activities. This will be through different service providers, maybe through FIs or even through any other third-party provider. This will achieve the success to increase the financial inclusion in the future.
And I will go thanks for your contribution. And I will go to Vivek.
Thanks, Remco. So I believe my key takeaway is all the parties, starting from regulator to the conventional banks to the new banks to the fintechs, the new age technologies, right? They all need to work hand in hand to provide that particular product to the end customer. Whether I'm talking about a retail customer or an SME or a corporate, the all parties needs to be onboarded together to go ahead as a one party and provide that whole seamless customer experience, ensuring the whole compliance is definitely within them.
Yes, compliance is key to customer experience. Absolutely agreed. Yeah, and Suresh, coming from Abu Dhabi Bank. What's your key takeaway from today's discussion?
I think, Remco, the key takeaway is the topic itself. The fact that we are all talking about financial inclusion and the fact that we are all concerned about this, we all believe in this. I think it's a very, very big message to at least among all of us and the people who are listening to us. We're all contributing about various schemes and the government, participation and stuff. I mean, Fahad spoke about Saudi, Neeraj spoke about Neeraj, Vivek, Jamal, everyone spoke about their different respective areas. The fact that there is positive sort of noise about this subject, I'm sure we are all headed in the right direction, and financial inclusion is only going to get better and improved in future. So that's, I think, it's positive. It's a good news.
Yes. I think it's all quite a positive takeaway that we took today, and also for me as a moderator, quite interesting to hear insights about developments in the Middle East, which look very positive. So that's why I want to pass the word to Neeraj, and you can give your key takeaway a little bit from a regulatory perspective.
So I believe, as Suresh also mentioned and Vivek mentioned, from a regulatory standpoint of view, all the parties need to work cohesively, and at the same time, the entities like the fintechs, the technologies, need to also be patient with the regulators. Right? They have to also take the onus of educating the different parts to this entire ecosystem. A fintech, for example, or a new age business just can't always come up with, okay, this sounds logical, why wouldn't everybody just come on board with it, right? I believe it is also the onus of educating the different entities to see what the eventual benefit is going to be for everybody.
Yeah, I agree. I think fintechs need to closely work with the regulators, but also I think what we see in Europe is that PSD2 was actually quite poorly executed. So I think centralization and close collaboration between fintechs, banks, and regulators is going to be crucial for the future of financial inclusion and the future of fintech in general. So I'm going to pass the last word to Jamal. So give me your few insights about today.
Basically, I was pleased to be with you today. As Suresh said, Mr. Suresh, that the fact that we are here discussing financial inclusion, it is a sign that and mentioning the importance of financial inclusion in the region. Of course, there is lots of opportunities for banking and insurance into this world. And my last take on this, actually, my advice is just to say that planning is really very crucial for all of this. The transformation, digital transformation in general, requires a thorough planning phase to make sure that you are moving into the right direction, understanding your customers and knowing where to go in the future. So this is my take on this. Thank you.
Thank you very much, Jamal.
Thank you.
Yeah. So, gentlemen, a few last words from my side. Fahad, Vivek, Suresh, Neeraj, and Jamal, I would all gladly thank you for joining this session today. For me, it was really insightful. Of course, coming from a Western European fintech scene, to hear your insights was very insightful for me. And I think we had a pretty broad discussion that went into a couple of different directions, but I think that was actually quite fun. So thank you all. And I wish you a really great time in the UAE and Saudi Arabia and all the places that you're all from. And hopefully we can meet sometime in the future. So yeah, thank you.
Thank you.
Thank you, everyone. Thank you.
Yes, thank you guys. Yeah.
Thank you very much, everyone, the panel moderator and the panel speakers, for contributing for our audience, and as well a lot of key takeaways. Thank you, Remco, for moderating